Next up, living in the real world. I just talked to him this morning about how headlines can drive the numbers that Paul just shared with you. Don Heinberg's a market advisor at Total Farm Marketing by Stuart Peterson out of West Bend. He is going to give us a grain situation and outlook, kind of like I said, real time, including today's headlines and what it may mean to everything that Paul just showed us. Don, come on up.
All right, we're rolling. All right, good morning. Again, just going to touch base on the grain market outlook for 2022. Got a lot of information, short amount of time to get through this. So again, a lot of the information will be publicized later, so you can go through slides or ask questions if you got a few moments with me after the presentation. But again, first off, just taking a look at where we are in the marketplace right now. Grain market's obviously very well supported. A couple things that come into mind. This volatility is here to stay. Customers, I deal with, are starting to get used to it a little bit more, but it's still kind of shocking. You wake up and all of a sudden beans are down 30 cents at 8 a.m. And by the end of the day, we're up 5. It's still hard for producers to grasp how fast things are moving, but that volatility is here because we got a high demand market. Again, is the demand still there? That's always a big concern. I'll go through a little bit on the export information in just a bit. In that regard, we are a little behind on some of those paces, so it's something we got to keep on focus as we move forward into 22. Are the supplies enough or are they tight? Supplies have grown. We'll take a look at that. And what's going on with South American weather? That's the big buzz, obviously, in the grain markets lately. I didn't even touch on the Ukraine in here today. Obviously, that's the big buzz that's in front of us right now, exploding this wheat market and really supporting the corn market here in the short term. The elephant in the room, does China come back and buy U.S. supplies? Okay, I'm in a business now where I talk about China on a daily basis. And so that's always our focus. Are they stepping in the market? What are they looking to secure? Lastly, what's our focus for 22? So with that, let's go ahead and just get into a few of the fundamentals that we're seeing right now when I'm talking to my customers about. First off, corn futures, soybean futures, very well supported since our lows. We're well over $1 higher in corn. In fact, March corn, pushing through the 620 barrier here yesterday and today. December corn's pushing the 670 or the 570 barrier today. March soybeans, obviously $2 plus higher since those November 9th lows. So again, we got a market that's got a lot of support underneath of it. Historically, we got good value, okay, and that's something producers and people need to keep in the industry side of where we are. You don't spend a lot of time above $6 corn, as you can see. We don't spend a lot of time above $14 soybeans as we're poking at right now. So that's an opportunity for producers to make sure we're looking at protecting the downside risk. Because a lot of times in markets like this, we're in this state right now, everybody loves prices. Okay, we call this our market cycle of emotions. We got high prices, people are happy, we're excited, how high can we go? I can just hear it in the tones of the phone conversations, but that's also the time we have the most risk in the marketplace, and people need to keep that on the radar, and that's things we keep talking about. Unlike where we were just a couple years ago when things were pretty brutal, $3 plus corn, and everybody was feeling hopeless, but that was also the window we had the most opportunity to the upside, which obviously we saw as the market spun back around. So let's get into 2022 and some of the focus that I'm looking at for talking with producers about supply picture, the demand side, the commodity super cycle in terms of what's going on with all these outside markets, the acre battle that's going to be in front of us, where's the money moving, and then obviously weather in 2022. First off, latest USDA report came out on January 12th. Soybean corn stocks are obviously improved from where we were last year, but at the same time, we're still tight overall. Okay, beans especially, if you can see where last year was, that's the black line coming through. We're basically double where we were last year at this time frame, but again, we still got a market that's very well supported. Looking at it on a more historical side, I think stocks are still historically low when you look at the last handful of years for both corn and soybeans. So again, still that is something that's still in front of the market, at least in terms of the overall supply picture. We like to use the term stocks to use. That's how much basically daily supply of corn and soybeans or wheat or whatever is out there. Those stocks to use numbers are still staying relatively tight. Just anytime we're below 10% for corn, below 10% for beans, around 10-12% for corn, that just tells us we basically got about 20 to 30 days of available corn supply, soybean supply to the market. So those are the numbers when you say, hey, that USDA report came out. The number that's key is that stocks to use ratio, and that's what the managed money, the end users look at and say, hey, I need to lock supplies in. Globally, Again, stocks, we're looking at production versus usage, and we're going to be going into our third consecutive year where usage is going to outstrip production based on weather, based on this lack of grain in terms of being produced out there. That's what's making the supply tight. So even though we're producing a nice amount of supplies, like last year's crops are, even despite the weather, strong, the usage is there. Okay, so any hiccups in it, and that's why we're seeing such strength in the market now, it's because we got a hiccup possibly coming in South America, and the market's already starting to jump in and price that premium in. Talked about the demand side of the equation, a little bit concerned right now, at least on the soybean side. Currently, soybean sales, the red line is last year, the black line is where we are now. We're about 24% behind the USDA projections. USDA thought we'd lose about 9%. So that is still a bit of a cloud hanging over this market at this time frame. Does China step in later, maybe into the summer, because of the South American weather issues and bolster those purchases? We'll have to see. Corn's actually on a pretty good pace. Got a long way to go, and we're still starting to see some activity pick up. Corn right now is a good value to the world. That's why we're seeing the export window starting to open up again here at this time frame. Demand domestically is still going to be something we're watching very closely. First off, soybean crush. Last month was a record for the month of December into January. Again, we got a big push in the soybean oil market. Typically, we crush beans for meal. Now it's more about the oil, the green component coming in with biodiesel. We're looking at jet fuel that's going to be biodiesel based. Plus, also we're opening some crush capacity that's going to be in play later this year that could bring another 100 million bushels of extra crush in, which will really put pressure on that soybean market. So that's one of the components. Plus, the edible oil markets right now. Bean oil is the cheapest of the world edible oils, between palm oil, canola oil. Those things all carried over from last year, and that gives us some good support in this market. On the flip side, too, we got usage for ethanol. As you can see, what we're forecasting for the USDA this year, it's going to be our best jump since all the way back to basically 2016. Profit margin's been strong. ADM came out today with strong profit potential of profit earnings, again, reflecting that growth in that ethanol industry. So even though we got good competitive demand on the outside, here internally, we'll have some strong demand continue to grow. Talk about the commodity super cycles. This is commodities in general. Obviously, since the pandemic kicked in 2020, the commodity sector has been on a strong climb. First off, Bloomberg Commodity Index is a basket of commodities weighted by strength. Energies is a big component of this. So that's why we're seeing that push. But as you can see, we're starting to break this out to the possible more upside movement as money continues to flow into the commodity sector, whether it's a hedge against inflation or just that investment tool that we need in this window. But we're seeing a lot of money flow in there. Again, as we take a look at crude oil, it's a big factor. This is crude oil. It's a couple days ago. We've broken through this key barrier. Right now, obviously, with the Ukraine issue being part of that push in that energy markets, looks like we're headed to the $100 barrel, maybe sooner than later. In fact, one analyst firm said, don't be shocked if we see crude bust out and go back and re-challenge those highs from 2006. Demand is good, supply is a concern. Obviously, that would have ripple effects through the entire economy if we do see something along those lines. Next, coming up this next few weeks, we're going to be tearing over the Acre battle. Now that we got through the January report, we're going to be really starting to focus on the battle for acreage. First off, principal crop acreage has obviously been decreasing over the last decade. That's still going to be a concern. How many acres are available? And right now, we've got a majority of commodities between cotton, wheat, oats. We look at all the little sideline commodities. They want acres as well as just corn and soybeans. So that'll be a big focus as we move closer into that March plantings intentions report by the USDA. Currently, right now, soybean corn ratio says we need to plant beans. Okay, it's pushing the bean side of the equation. Right now, if we don't have 90 million acres of corn next year, we will not have enough. Okay, that will really tighten up the supply given the demand side of the equation. So that's going to be a pretty interesting battle. And what's happening because of that South American weather, they are putting the pressure on us, the U.S. producer, to have another bumper crop. So that weather issue for us this summer will be very, very volatile in the marketplace. Money flow, this is the managed money, the hedge funds, the people that put, the investors inside the market. As you can see with corn, soybean market, they're sitting pretty short or very long, 100,000 contracts. But compared to where we were back in 2020, up to 238,000, there's a lot of room for money to move into that market and push that soybean market higher, whether it's led by meal, led by oil, up and down the line. Core market's been pretty consistent, as you can see, all the way through the last year. And we're again starting out right in that same window. You know, we've got these expanded positions, so there's a lot of money holding on to things. Now, if we just get that headline one way or another, we can see that money move extremely quickly. And again, when they're in a market with a high amount of risk, things could fall apart very fast. Weather for next year is going to be a big focus, and it currently already is. Obviously, we're in a La Nina weather type pattern that's been affecting South America. The area that we're focusing on is that center region where Paraguay is, southern Brazil, into northern Argentina. In fact, today I think it's 105 degrees again in that window. They're talking 100 plus temperatures every day again this week with minimal rainfall. So one analyst estimate said the Brazilian bean crop might come down under 130, maybe as low as 125. If that's the case, the global bean supplies will be extremely tight. So we'll have to continue to watch. Again, those are shots in the dark, at a dartboard basically in terms of those yield projections, as we found out with U.S. yields this last year with the weather issue. So as you can see, the vegetation has been poor in that region. Argentina did pick up some nice rainfall recently, but it's been isolated to one band. There's the temperature forecast. Again, you're seeing that red spot. That's that region where we're seeing that white circle. You'll often see white on temperature gradients. That tells you it's hot. The United States also is going to be a bit of a big concern going forward. Obviously, the latest drought monitor map from the 18th. Southwestern Plains is going to stay a concern in the wheat market in that regard. We saw crop conditions slip again this week as we're getting closer to breaking dormancy. You can see we actually saw some degradation in that area. So we're not starting on the greatest of places at this time frame. So wrapping up for 2022, what I'm telling producers and talking with people about here are keys. Again, that volatility is not going away. Keep flexibility in your marketing because we're going to have prices swinging everywhere in this time frame. But instead of worrying about how high prices can go, make sure we're managing the risk. We just got done hearing Paul talk about break evens and we're above those price levels. Set floors and protect yourself, leaving the upside available to yourself. And again, that's that flexibility. Stay disciplined, build your base, okay? Market opportunity, stay in the marketplace, and own potential using strategies to keep you in the game. But again, making sure you're protecting yourself, having that flexibility. And again, last thing, the risk of doing nothing in a marketing plan might be greater than doing something to protect yourself. And right now, markets are starting to move for 2023. Don't fall asleep on the future with these price levels. Thank you.